Coming to you weekly from the OnPay recording studio, this is the Cloud Accounting Podcast.
Hello and welcome to the show. I'm Blake Oliver.
And I'm David Leary.
And we are coming to you live from the OnPay recording studio, just back from the AICPA Engage conference in Las Vegas. David, was great to see you as always.
You as well. 3 nights in Vegas is just too much.
I know.
It's really hard. 2 nights is perfect. 3 nights is too much in Vegas.
2 nights is the best, but it's a big conference, right? And a lot of people stay for 3, 4, 5 days, getting all the CPE they can. And there were some great speakers. We got to see many of our friends who were speaking, many of our friends who were exhibiting, and the firm owners that we love to hang out with as well. So great to see you all. And I had a really great time, actually.
We had a great talk, 7 a.m. on that Monday morning with ShareFile. And
That's
it was
right.
well attended. What, for a 7 a.m. Monday session, 120, 150 people maybe?
Yeah, don't be afraid of those early morning sessions if you're a presenter, because there's all the people from the East Coast that come in. And at 7 a.m. Pacific, they are awake. They've been up for hours. So, yeah, that was great. We did that with ShareFile. It was called, I think, Elevate and Modernize Your Client Experience. And we got to do basically a discussion between you and me and our friends from ShareFile about client experience in accounting firms, which I believe is a huge opportunity for firms. I think I've told you that story about my mom's tax return, David.
Yeah.
Have I told you that on the show before?
Well, I don't think you told me on the show, but you told us in the presentation. So why don't you tell it on the show then?
Well, I have more developments. I have more developments on this. So my mom has been a client of a small firm. I think they never had more than 10 partners for, almost my entire life, at least 30 years, okay? And always had her taxes done, always had a great relationship with the partner there. And that firm recently, last year, merged in with a top 50 firm, a name brand firm in Southern California. Like if you are an accountant in California or the Southwest, you know this firm. And the experience that she had this year was a disaster. Like she tells me these stories over the months, and I could not believe what happened. So the way it started is normally she has a conversation with the tax partner, like a call just to say hi and go over anything new. That did not happen this year. This year, the very first communication from the firm was, here's your tax organizer. And it was a PDF that she could not fill electronically. Now, my mom's in her 70s, but she's pretty tech savvy, and she knows how to fill a PDF organizer electronically. And the firm sent her one that she couldn't. When she called and asked, hey, how can I fill this out online? They said, no, the best thing to do is to print it and fill it out by hand and scan it back to us.
At least she has the courage to try to fill it out. I got my new tax organizer PDF in first week of January, and I still have yet to try to attempt to fill it out.
Well, she's a very diligent client, right? She does her job. So she said, okay, fine, I'll do that. So she fills it out, sends it back, and doesn't hear anything, doesn't get the meeting scheduled or anything. And the next communication from the firm is a tax return. They send her the tax return, and they say, here it is. We're ready for you to, e-file authorize us to do this. And she looks at the return, and they've got her marked down as blind. They left out some big deductions for a real estate transaction that she had. Like, it was just wrong. Okay. And so she writes back and she says, hey guys, you missed this. Like I'm not blind. You know this. And then she, finally gets back an amended return. And she's wondering, why did I get back an amended return?
If they didn't file a return yet.
They filed her return without her authorization.
Oh boy. Can
you imagine? And this is a top firm. And that's what we were talking about in this client experience session. And the only, I don't know what happened inside the firm, obviously, but the only thing I can think is that they just don't have procedures in place to ensure that every return gets properly reviewed. Somebody went, somebody exceeded their authority and broke procedures and just filed the return. So now.
Well, you have to have procedures. This is why when our listeners on their podcast players, they go to download the episode, it is the Cloud Accounting Podcast, not some other podcast that we make, because we have checks and balances to review things before it goes out the door.
Exactly. And I actually think that, we like to talk a lot in the thought leader world about all this amazing technology that's out there and all these things that you should be doing in your firm with generative AI and all that stuff. But we got to remember that a lot of firms still don't even have workflow software. Like they're still using spreadsheets or maybe nothing at all to manage the work that comes in. And of course, the consequence is that you are extremely inefficient.
But it
And
could
you
even be a
create,
paper checklist. You could still have a pen and paper checklist of things to do before a return goes out the door. It doesn't even need technology. It's the procedure.
yeah, right, just having the procedures written down, right? But in my experience, we didn't really have procedures. It was all up to the individual managers and directors and partners to make sure that happened with their staff. Like there was no firm-wide system. So anyway, these accounting firms that operate like startups where they do have electronic systems and procedures are just, crushing it. And that was one of the stories I told in our session and what I was trying to get across, and just in terms of like the opportunity. So like I think
The
a
real question
lot
is,
of
why are you not doing your mom's return for her?
because well, thank God my family understands that I am not a tax CPA, right?
Okay.
So they don't expect me to do that stuff. I say, yeah, I'm not doing it. I don't do my own return finally, David. I finally gotten past
our
that.
return though. Last week we started our return though, Blake.
Oh yeah. So we are testing out TurboTax Business, and we started the process last week. We are recording our experience, and we are going to release that video when we're all done, so that all of our tax friends can see what the experience is like with Intuit on their full service business side, which they have now. Now they do business returns. They're competing directly with accountants in that regard. So we wanted to show you what it's going to be like. So we actually have that call with
Today.
our preparer today, this afternoon. I'm very excited.
We get to meet our
see
tax
that.
preparer.
Yes. So thank you, ShareFile, for bringing us and doing that session with us. And it's really cool, actually. We got to talk with Kurt, who is, I forget his role at ShareFile, but he's like, is he running the ShareFile show?
I think he's been around Citrix for a very long time, but now they Citrix, I think they rolled things up, then they're unrolling it, and now ShareFile is kind of its own thing, and they're even rolling out features just for accountants. So they're, these things are big companies, right? They roll a budget up into one thing, and it gets mixed up in the priorities, and now it's coming back. The pendulum swinging back to where ShareFile is its own thing, its own budgets, its own decisions, right? Its own engineers, its own code, and now they're finally making momentum and adding a bunch of functionality around accountants.
So we got to talk with the people who are making those key decisions, and it's really exciting to hear what they're up to. So that was great. We also had a booth for the first time at a conference for Earmark, and a big booth backdrop that you made, David, that said "Earn CPE for listening to podcasts," and we got a ton of signups. I want to thank you, David, personally for doing that.
Well,
that was
really
awesome.
You have to think quick fee. So this is. I mean, ultimately, this is a dream I've had for a while because we've complained about this. We go to these conferences, we try to record. Other podcasters try to record, and we're put in a boiler room. Literally, we're underneath an escalator. We're at a floor where there's tile. People walking by, and you hear all their shoes as they walk by. And I've always wanted conference organizers to give a place for people to record. And the opportunity arose with Jennifer Wawa from QuickFee. And she offered to give half their booth space to us to record it. And obviously, you and I can't record for 8 hours a day. Right? That's just too much. So we recorded some interviews, but we opened up our equipment, since we had all our equipment there and our engineer, to other podcasts. So Healthy, Wealthy, and Wise Accountants recorded, Accounting High recorded, The High Table recorded, Terrell Turner's podcast, I think it's called like Things Your Accountant Isn't Telling You. They recorded. Some people that are starting brand new podcasts just used our equipment. It was really cool to like open up our stuff for the community for free to some extent.
Yeah, that was great. Making podcasting accessible to everybody, bringing out the voices that haven't been heard in the profession. That's what I love doing. So thank you, QuickFee, for bringing us to the conference and helping us do that, because unfortunately, a lot of these organizers still don't understand the potential of podcasting and getting the people that are there creating content, promoting your event. Like, it seems like a no-brainer to me, but it's like really hard. And it's not just AICPA that has trouble with this. Like, a lot of the conference organizers don't get this. So thank you, QuickFee, for helping us do that. We also celebrated our 1 millionth download on the Cloud Accounting Podcast, David. You had cupcakes.
If you saw it on the socials, maybe that'll be the artwork. We had cupcakes that were nicely decorated up, and I didn't even have one because I was carrying around around them so much, I inhaled so much sugar. I didn't even have to eat one.
You got people to eat the cupcakes. That was great. Yeah. We also attended the AICPA Town Hall's 100th episode. Congrats to the AICPA on their 100th episode of their own podcast. And I learned that as many as 9,000 people tune into that show every 2 weeks, which makes it very influential. And
I think it's it's probably one of the best things the AICPA is doing by far. Now, I still do believe that we helped influence the creation of that show.
You do like to mention that every time it comes up.
Because basically, remember when PPP, the loans started going out, and we were in this, we were doing 2 or 3 shows a week, tracking the money, where's the money, who's getting the money, all the accountants, bookkeepers we know, their clients aren't getting the money, the IRS is saying numbers X, and, excuse me. So, Eric, it was Eric, what's his last name?
Askerson,
and then it might have been Mark Koisel that came on at the time, who's no longer with the AICPA, I think. They came on our show like April 11th. We kind of had our own version of a town hall with them. And then April 20th, they started doing their own town halls from that point forward, because in the way we were controlling the conversation. So this is really good that they're doing these. They hit 100 episodes. I think they're at like 800,000 downloads. It's great.
Yeah.
It really is good that they did that.
And I really like the recap they do. They do the recap
cookies.
of what's going on in Washington, right, politically, which I think is great for accountants to know, like, here's what's influencing us and our clients, potentially.
And you get a little behind the scenes of what's going on. So, I mean, this is news, but there's we talked about it last week, the debt ceiling change. And we reported that the IRS has $10 billion less.
Well, yeah, so I guess it went up after we recorded that episode. So now it's funny because in the actual bill, it was only $1 billion and change that was taken out of the IRS budget. But there's a side deal to take $20 billion out of the IRS $80 billion extra that it got. And that was not in the bill. That's still like a handshake agreement. So
and it's a complete bullshit way they're taking it out. So basically there's going to be the $20 billion is going to be kind of in a bucket over here.
Okay.
And any other government agencies that maybe they have a budget concern or they need some money, they're allowed to go dip in there and just take some. It's the most bullshit thing I've ever heard of in my life, and it's a handshake deal. Like it's on.
Yeah. Well, like you said, David, very intelligently, it doesn't really affect anything in the short term because that $80 billion was over 10 years, and there's no way they're going to spend it all at the beginning. So they're really just taken from the end. So if politics change, if administrations change, then the IRS could still end up getting just as much funding, right? It doesn't actually change anything right now. It's an accounting trick.
The IRS should just say, we're short $20 billion and just go earmark it all to themselves right away.
So, there is one thing about the AICPA Town Hall that kind of bugs me. It's the fact that they call it a town hall. And I know there's something about town halls that are different than what the AICPA does. And so, I asked ChatGPT, what is a town hall style event? And ChatGPT said, a town hall style event is a meeting or gathering where members of a community have the opportunity to directly engage with public figures. It is called a town hall because it aims to replicate the open discussions and democratic decision-making that often take place in town halls. In this format, participants can ask questions, express concerns, share opinions, and receive responses from the invited individuals. It fosters community involvement and allows for direct communication between the public and those in positions of authority. So the one thing I would suggest to the AICPA, if they want to really improve their town halls, is to make it more democratic and more open and not filter those questions that people are asking, those comments that people are making in the chat. Because we know on my favorite topic, the 155th year of education topic, that is not popular in the profession. And the AICPA could actually do something very, very easily to figure out just what people want. They could do a live poll on the town hall. Ask the 9,000 CPAs that are there in the audience.
Significant.
Yeah, it's huge, right? It would be a massive survey. Ask them, first of all, I'll do a poll question, say, are you a CPA or are you not? And then do a second poll question that says, gives a few options. It says, I want 150 to stay the same. Second option, B, is I want an alternative, 120 plus 2 years of experience. Or I just want to go back to 120. Like, give people the options and see what they think. And I think AICPA would learn 150 is like 80% of the profession wants to change, because that's what we saw
should
with
be a
BDO
guest
Alliance.
on the town hall and could discuss this with them. That would be
Well,
my
yeah,
dream.
that's going a little far, David. I don't know if that'll happen. But, we did have some really productive discussions with AICPA people. And, our listeners know that we have not been able to get media passes to these events in the past. Last year, we were denied media passes. And, I got to be honest, that really upset me. And it did not put me on a good footing with AICPA. But I know there's lots of good people there. I know that's not everybody. It's a small group that said no. But we had some really productive discussions with them. And I think, I want to thank Casey Johnson for being our advocate there. And we're going to be media at Digital CPA this December. And hopefully next year at AICPA Engage. And we don't have to play these games with, getting sponsors to bring us to the event, right? So I'm optimistic that we can reset this, and that I hope we can help. I feel like there's a lot of CPAs that the AICPA isn't hearing from because they don't go to these events, but they do listen to our podcast, and we can help bring that voice to the AICPA and be a bridge.
And we've talked about this before, like inclusion, diversity, et cetera. But if it costs $3,000 to go, and a lot of these bigger firms have policies of like only partners get to go, it really makes these events not as inclusive as they possibly could be. But
on that note, David, let's think about this, right? AICPA Engage has how many attendees?
3,500 were there probably. It's hard to tell because it's 3 stories, and they don't drive everybody to the expo hall, so it's hard to tell.
3,000 or so, right?
Yeah.
There are 660 approximately licensed CPAs in the United States. 600,000. Okay, so we're getting a fraction of a percent of all of the CPAs. Not to mention there's millions of accountants. So what I would love to see is for AICPA Engage to become bigger, like way bigger. There should be tens of thousands of accountants at AICPA Engage if it's really, it is the premier accounting event. It is the biggest event for CPAs that I'm aware of in the country, right?
So it's like the Super Bowl of our event. But you're right. If it's a Super Bowl, we should have 30,000 attendees, not 3,000.
Exactly. So how do you do that, right? And I would love to see the ticket prices go down. And yeah, the ARIA is nice, and like the event is really nice, but I think it would be better to prioritize getting more CPAs there to figure out how to bring down the prices. And then also, like, I think the thing that we agree with the AICPA on when it comes to the talent pipeline is that accounting has an image problem. The CPA has an image problem. So what better way to restore that image problem, to make accounting look cool, than to have tens of thousands of young accountants coming to Las Vegas to enjoy education and entertainment. So what if we got the firms to not leave their staff back at the office, but actually bring them to Engage and show them a good time?
I mean, they're trying. Mercedes-Benz was a sponsor. So they rolled in 2 electric vehicles, the really nice new electric Mercedes. Where did you sit in it?
No,
it gives you a massage. It's a massage chair. Like, it's amazing in the driver's seat. So, but I learned something from the Mercedes-Benz sales guy. Members of the AICPA get a discount through Mercedes on cars.
Oh,
like,
really?
They should be playing this up.
Yeah. I mean, I knew about the life insurance, but I didn't know I could get a Mercedes discount.
You want a discount on a Mercedes-Benz, become a CPA. They should be. These are member benefits that, you're right, are lost to the shuffle that actually help change the image.
So this is one thing that I think we should really work on changing as a profession is, you want staff to feel engaged, bring them to Engage. Don't just bring the partners and the senior managers. David, you were on the show floor more than I was, right? How many staff did you meet?
A lot. But,
really?
But unfortunately, I'm sorry, not staff. I went the opposite. Not much staff. It's mostly it's leaders, right? Leaders of firms.
Leadership.
But it's also, in general, just to spin out the floor. The floor was tough. So the way the venue is, it's like 3 stories, and the show floor is on the bottom, and the show floor is actually split because they have so many vendors, which is great, but it's like having 2 show floors.
Yeah.
And it takes a while. There's a lot of vendors to go through and meet and talk to and browse, if you're an attendee. But the AICP didn't do much to drive traffic to the show floor until the very last night. They had a closing reception with a decent amount of food, and the best energy of the event on the show floor was the last hour and a half, unfortunately. Right, but for the previous 3 days, it was a little bit of a ghost town. And this is where my suggestion, because they serve the food on the other floors. It's like serve all the food in the expo hall, get people down there, because that's where you get nice energy. And
well, that's what
vendors
Intuit does. That's
excited.
what Zero does. That's what Sweet World does. Yeah.
Joe Woodard does with Scaling New Heights. Like you
food.
It keeps
people
everybody
follow the
excited
food
on the show floor.
Well,
and then what else was interesting that went down that we saw?
Well, I got to connect with a lot of people that I haven't connected with in a while, and Donnie Shimamoto was one of them. Ran into him at a happy hour, and
That's good.
You know what was great? I learned. So Donnie, he's told us on Twitter. He's told us that he wants less opinions, right? More news. Yes. We hear you. Unfortunately, there's just not a lot of data when it comes to like the future of the accounting profession, right? I want these state societies and AICP to do surveys and to find out what's going on. Well, Donnie also agrees, and he's tired of there not being data. So he has taken the initiative to go out and do a research study on this stuff. He's doing a staffing research study, and part of it is going to include finding out about education requirements and is this harming the profession, and what do people think about it? So I've invited him to come on the show and talk about the results when they're available. I hope he makes them
I heard he was
public.
on a panel or something. He stirred the pot a little bit. I was really happy to hear that.
Yeah,
Johnny was stirring the pot.
So it's nice to hear that people are like we need to actually listen to the profession if we want to solve the problem. So that was great.
We should talk about the kind of the unconference that happens at AICPA Engage. If
Well,
you want to call it an unconference, I don't know what a better word would be.
CabanaCon.
CabanaCon.
So this goes to your thoughts on the expo hall floor, and I agree with you that it's like too big. It's also very expensive to exhibit, and so a number of startups have decided not to exhibit at AICPA Engage because of the low traffic and the big expo hall floor, and to simply rent cabanas at the pool for several days, which costs a fraction of the price of exhibiting. So I got to sneak out a little bit and enjoy some of the Las Vegas sun.
But not just that they're renting cabanas. So they're doing their own unconference at the venue. But there's accountants that are coming into town, not paying for an AICPA Engage badge. They're not attending AICPA Engage sessions. They're just there because there's people that are worth networking with, and they're just hanging out at the pool. And then some are listening to Earmark, getting their CPE that way. So
yeah, I feel so pumped having gone to the conference because I feel like there's this group of us, accountants who have small firms, accountants who've gone to work for startups and apps, and accountants, in the societies, who, we really care about this profession, and we all get together, and I feel like I've actually found my tribe, and it took me like half my life to do that, but now I feel like I have it, and I want more accountants to feel that way too. So I want to figure out how do we get more of the younger generation out to these events and having a good time. It's
maybe it's the pool. Maybe for those younger ones, they just have to get a hotel and a plane ticket, and they can attend a pool.
Well, the problem is it's pricey, right? And you don't make this is the problem with accounting, is that all of the rewards occur like 10, 15 years down later in your career where you really make the money as a partner. This is the problem with the partner model. The staff don't make very good money, and the partners make great money, and people are dropping out before they make it. They're giving up, and we got to solve this problem with the profession. It doesn't work anymore, right? And it's because external factors have changed, right? The cost of living has gone up to the point where $70,000 or $80,000, you cannot save up a 20% down payment on a house. You could do that in 2 years back in the 80s. 70s or 80s. Now it would take you 10 years to save up a down payment on the exact same salary. It's just unsustainable. And so people say, well, if I can't have my American dream, why should I put off a higher salary? Right? It's just the fact of life. It's just we have to change as a profession. We got to figure this out. And so, democratizing the CPA firms, making it not take so long to get equity, giving staff a voice is the way forward. I don't see how else we do it. We
The
can't have this situation keep going. And the new
time to the
firms
salary
aren't
is
doing
one of
it.
the best
Yeah.
quotes I heard from somebody. So many discussions. I don't even know whose mouth this came out of. Essentially, they were in one of the sessions was talking about how accounting firms spend almost 20% of someone's salary to recruit an employee.
Mm-hmm.
So if they're paying them 100 grand a year, they're going to spend 20 grand to recruit them. And it's like, why not just pay everybody 20% more and stop having to chase and constantly recruit bodies to your firm? And I was like,
Yep.
oh, that's like the simplest solution of all of this. Like just shift the hiring budget that you're blowing and just give that to employees to begin with
You would think.
instead
I
of
want to
chasing new employees.
I want to thank all of our listeners who have joined us live this morning. Taylor says, yeah, the events are very unaffordable for young CPAs or even non-CPAs. I feel like a lot of CPAs are going in business for themselves. And I agree, that's what's happening is they're leaving. And if they're not leaving the profession entirely to go do something else because the job market's so hot, they're starting their own firms because all you need is a laptop these days and an internet connection to start your own firm. The cost of starting up is very low. And that's why, taking it all the way back to the discussion about my mom's small firm, that's why they're merging into bigger firms because there's no succession plan. But that's only a temporary fix because these large firms have their own internal struggles. They don't have succession plans, and you can see it in the disaster that is the client experience. So we're just pushing the can down the road, kicking the can down the road with this. There's a serious problem that is building, and we got to do something about it.
I think this is a good transition point because wasn't there something in the news like the first day you landed, somebody tagged you in Twitter about somebody couldn't file their quarterly reports, a public company, because they don't have accountants?
Yeah. I forget exactly which company it was. I'll have to look that up. But there was
AutoZone, Auto Parts, one of those kind
Advanced
of companies.
Auto Parts, right?
Advanced Auto Parts.
So Advanced Auto Parts, I think it was in their 10Q, right? Their quarterly financials. They missed the deadline. And why did they miss the deadline? They said it's because they couldn't staff the position to do the 10Q. So this is the beginning
It's a crisis.
Right. And we saw this with cities. There are nearly 100 cities that have lost their bond rating because they couldn't file financial statements with the bond rating agencies, or the bond rating agencies couldn't rate them because they didn't have financial statements because their audit firm couldn't do the audit, or they didn't have staff to put together the financials. Like, it's starting to become a problem in the real world, not just inside of our firms. And my worry is that if it becomes a big enough problem in the real world, that state legislatures will say, well, if the CPAs can't do the job, then we're going to let the non-CPAs do the job. And the CPAs will lose the audit. We have exclusivity on financial statement audits, but if we can't do them at the right price, at the right time, that's not a guarantee, right? Like, we were given that because of our reputation as a profession. If we can't deliver, we're going to lose that, and that's the beginning of the end. That's the warning, right? That's the worst case scenario in many ways.
Yeah.
Dan says large firms are taking advantage of the 1 to 10 headcount firms. Big consolidation happening. Yeah, because they don't have the internal succession plans. So these 1 to 10 firms have to sell, and they sell at a steep discount, right? They're not getting the multiple they were hoping for. But I think the big firms, right, while they might see a quick win by doing that, they still don't have their own succession plans. So, like, I think the problem is going to be the same for them. It's just down the road a little bit, like 5-10 years from now.
Yeah, and
they're
like
going to start having trouble.
Oh, this is an easy way for us to boost our headcount and get some employees. But if your culture and your company's not set up right, those people are eventually going to quit anyways. And what are you going to buy, more firms?
And it's a symptom of the obsessive focus on top-line revenue in accounting firms, and especially big firms. Like, the ranking of firms is by top-line revenue, not by profit, which is insane to think about. Like, what do we care about in the end? We don't care about how much revenue we have. We care about how much money we take home. But we rank all these firms based on top-line revenue, and we reward partners based on top-line revenue. I mean, that's just a stupid way to run a business. You ask any other business owner, like, what you prioritize, And top line revenue is not what you prioritize. Only really stupid startups, like with the startups that we like to make fun of, David, prioritize top line revenue and go spend billions on Google Ads to generate, millions in customer revenue. And then they go out of business.
Revenue, it's just email addresses in many cases, right?
Yeah, exactly.
We have the most email addresses, we win.
Yeah. So David, let's get to the tech news. Unless you got something more to say about AICPA Engage.
I don't have that, but I do have just an interesting article about a client suing an accounting firm. It's not even an article. This is just a lawsuit's been filed, and it caught my eye. So do you remember when, towards the end of the pandemic, I think it's the Comedy Store in L.A., they sued their accountant because they never filed for their PPP loan on time or PPP loan on time or something, or the restaurant revitalization or something.
They said that this is the Comedy Store, like the famous stand-up comedy franchise venue. There's a bunch of them, right? They sued their accounting firm because the firm didn't get their PPP. Like they didn't file on time, so they missed out on the PPP funding.
Well, so it caught my eye. It says landscaping business sues accounting firm over alleged COVID. And then it's ... It doesn't have the whole article title listed there. But essentially, the suit accuses the defendant of inducing Acer Landscape Services to apply for tax credits that the business did not actually qualify for, causing it to obtain a payment of $1.4 million fraudulently. And the defendant, the firm, received $300,000 in commissions. And I was like, oh, here's another story about an ERC mill, right? We talked about these.
Right.
Well, then I drilled down, so I searched. The landscape company is Acer Landscape Services, and the accounting firm is Lassiter & Lassiter. So I pull up Lassiter, and this was filed in Tennessee Middle District Court. So I pull up Lassiter & Lassiter. They've been around like 28 years. It's multi-generational, kind of family firm. But when I search for them on Google, the very number one hit is their ERTC landing page. Oh. Then the number two hit is their about page. And then 3, 4, and 5 are just some random people with the name Lassiter in their name. And then number 6 is ertcfundsforyou.com, which basically takes you to a URL mass page of Lassiter & Lassiter CPA page of one of their subcontractors that's directly targeting ERTC. So I don't know what to make of it. It's just things are... These businesses that are going to be on the hook with the IRS if there's incorrect claims, they're going to start getting desperate and have to file lawsuits, right?
Yeah.
Well, and who knows how aggressive they were? We don't know. Like it just says this lawsuit was filed and who's in it.
So basically, it sounds like this firm was kind of operating like an ERC mill. They were doing these improper ERC applications.
We don't know improper or not,
for sure.
But obviously they were leaning into it because.
Well, if they've done
search for their firm, you get an ERC page.
Right. So they're leaning into it, and then you have all these other CPA firms that maybe they aren't doing it themselves, but they're referring out the ERC work to a mill and getting a piece of the action. And this is the warning for all the firms that are doing that: is if you are signing the return, you are the one that is at risk. You are the one that will get sued, not the ERC mill. I mean, they could get sued too, but they're probably going to be gone and in the Bahamas by the time you get sued.
So that's a chance. Maybe they didn't even do this. They worked with somebody else who did it, who pressured the client, and maybe that other company's gone. The lawyers are like, well, let's sue the firm. Yeah, there's no details on this, but I just thought it was interesting. Oh, here we go. Like now they're suing the firms because of the fraudulent COVID activity.
I think that we are going to see a massive number of lawsuits against CPA firms for these improper ERC claims, and the firms may not even have done the work. They may have just referred it out, but if they sign that return, filed that return, they could be liable.
Yeah, it's just going to the argument's going to be you're supposed to watch out for these things. You're my CPA.
Right, you're a CPA. You're trusted, right? Yeah. Better have that insurance. We've got some more feedback from our live viewers. Jessica says, and the large firms are buying smaller firms because they can't find workers any other way but to acquire them via buyout. It's an interesting time even in rural areas for small CPA firms. So I agree. That's probably the reason large firms are motivated to acquire is they need people. But what if they can't hold on to the people? Then they've bought this book of business. And, my mom's an example. She's going to churn out because of the bad experience she had. And now they've got all these staff that are, operating in a system they don't understand, that's disorganized. Like the churn in the next few years could end up making those acquisitions not very appealing.
But aren't they acquiring just to get bodies, like employees?
Right.
They're not trying to get clients.
There's no guarantee those employees are going to stay.
Yeah.
Right. So Tino said regarding the Advanced Auto Parts, Advanced Auto Parts currently has 3 job openings, and none of them have salary information. 2 of those are hybrid, and it's based out of Raleigh, North Carolina. I doubt they're paying at or above $100K for any of those 3 accounting jobs. Yeah, who would want to take an SEC reporting job at a public company for less than that? No salary information. Good
I wonder what
point.
if you have those open right now, Tino.
I don't have
What are
them
the
open.
what are the salary or not the requirements? Do they want you to have a CPA? What's the
Oh yeah,
minimum
yeah. Are
education?
are their requirements ridiculous as well? Because that's the thing I always see online is, we want a CPA with 10 years of experience, and we're willing to pay $60,000 for our controller position, right? And the problem is, of course, that the management just sees this as a compliance function. They don't see any value add, and so they want to pay as little as they can for it. The problem is there just aren't enough people now to take these jobs, right? Nobody's willing to do them. Tino said CPA preferred. So it is CPA. They're saying CPA preferred, but they're not saying you have to be a CPA. That's interesting. Yeah. People are getting desperate. All right. We said that we would talk about Intuit and their generative AI initiative. So, David, I have not read the press release. I hope you have.
So
because I'm putting you on the spot.
This was everywhere, and it's kind of confusing because they call it GenOS, and it's picked up all over the place, and I can't make heads and tails of it fully. But then I do have the actual Intuit blog post or press release. We can go to that. But in the announcement, I'll just kind of give you some numbers. And I know we talked about this last week. I think I talked about how many patents they had. So I'll just read this out verbatim. The company has 400,000 customer and financial attributes per small business, as well as 55,000 tax and financial attributes per consumer, and connects with over 24,000 financial institutions with more than 730 million AI-driven interactions per year. Intuit is generating 58 billion machine learning predictions, ready, per day. 58 billion times a day. Intuit is pumping out machine learning.
I don't even know what that means. Like,
well, bank feeds. Every time it makes a decision, right, about a bank feed or a piece of data, it starts to add up. But so they have all this data, and so what they've done now, and let me open up the other article here. So what it looks like what they've done, they're opening up, they call it GenOS, and that's going to empower, and this is all this verbiage in these press releases, Intuit technologists to design, build, and deploy breakthrough generative AI experience with unparalleled speed. So it looks like they've basically built a tech stack internally for their own employees and their own teams to use this. Reading between the lines in some of these articles, there's a vibe that maybe this gets opened up to developers. So imagine all those apps in the QuickBooks App Store can now maybe tap into some layer of this, right?
That would be smart.
It's 4 layers, right? So what they have is they have 4 core components. They have Gen Studio. So basically, this is the development environment, allowing the Intuit developers to experiment and refine generative AI experiences. They have Gen Runtime, which is a layer that chooses the right language model in real time and calls the right data in real time. So if you need to, basically it's a layer of AI that's going to give you the 2 pieces of things you need to build the customer-facing AI. Then they have Gen UX, which is the library of user interface components to ensure there's clear, delightful, transparent experience when you interact with the LLM. So they're building their own LLM. And then they have the financial large language models. So these are custom-trained financial LLMs that specialize in solving tax, accounting, marketing, cash flow, personal finance challenges. They can provide actionable insights and invoke actions like contacting human experts. So the more I kind of start reading this more and more, this isn't about Intuit adding AI to their existing products. They're going to launch a brand new product, and you're just going to use it, and it's going to be their own version of a ChatGPT, whatever they're calling it, an FLLM. FLLM is probably
financial large language model,
and you're going to use this for everything: your personal finances, your taxes. You're going to use it for your small business, and the more I was thinking about that, I was thinking about the whole Expensify stuff. I'm like, Intuit should just buy Expensify and roll that in because there's so much like directional overlap in there, visionary-wise, it feels like. But we've been predicting they were going to release something. They released a press release, but it sounds like there's a lot more. So I'm trying to reach out to Intuit so we can get somebody to talk about this at a deeper level. But it's a lot. I mean, they're building a whole technology stack We're just not, hey, we added AI to QuickBooks.
If they deliver on this and build OpenAI ChatGPT for accounting, tax, finance, that solves the problems that we have with these LLMs right now, which is that they're not specifically trained for our profession. And if Intuit solves this and opens it up to all of the apps, that will just turbocharge all the data they have, and it could stimulate. I mean, I'm thinking this is like when the QuickBooks App Store opened up, and it went to hundreds and hundreds of apps. Just how much that changed the lives of accountants and small business owners. That was cloud accounting, and now we're going to do it again. Another 10x improvement in productivity or more with AI. And like the number one, I think, immediate use case of these models in like QuickBooks is just completely automating the coding of transactions to the point where like we're barely doing any of that. It's just automatically going from the bank feed into the general ledger, and it's 99% accurate, and we're only touching the 1% that AI doesn't really know what to do with, and it surfaces those to us, and we can look. That's like we could actually have instant financial statements, like always up to date.
And if I go back even before I left Intuit, there was these visions of like the developer API version 4. And what it would be is Intuit would actually put the transactions together. So if you're a developer and you have half the transaction, or piece of a transaction, maybe you're a construction app and you send some data over to QuickBooks, and Intuit gets something downloaded from PayPal and maybe something from the bank. Intuit, in theory, the developer platform could figure out what the accounting transaction is and then push that in. And this is that second layer of that, right? Like you're right. This is probably coming where the accounting data is going to get into the accounting system all by itself, except for maybe 1% of it. And that'll be so everything. Yeah, they're what is this? The financial large language model, is that what they're calling this?
Yeah.
Every time it's confused or can't figure out, it's going to stick it in the Ask Accountant.
Exactly.
In QuickBooks.
Yeah, but instead of 90% of the transactions that our clients code into that, it'll be 10% of the transactions. That's the hope, right? Yeah. So we also had an announcement from CPA.com at the event at AICPA Engage. They announced their own generative AI initiative that will consist of an ecosystem scan of software partners experimenting with AI and large language models in their products. They're going to do an AI symposium that will bring together subject matter experts, firm practice leaders, and others to exchange strategies and information on the real and potential impacts on the profession. I think that's going to be
a revenue grab. Hey, all these AI startups are getting all this funding. Let's have a symposium. Charge every one of these startups to come to our symposium. It's like, yeah.
Yeah, it
maybe we can get invited to that. I probably just blew it now. But.
Yeah, thanks, David. You can invite me. Leave David at home. An AI-specific cohort within the 2024 AICPA and CPA.com Startup Accelerator to support the growth of early-stage companies using this technology to benefit accounting, and AI-focused training. So they're doing a webinar on October 24th about generative AI, the great equalizer, and dedicated sessions at the Digital CPA conference. Any other tech news this week that we got to talk about that we didn't get to?
I feel like I'm still in my AI news folder. I didn't even get to the tech news yet.
Well, AI is tech. Tech is AI.
There's a spreadsheet company called Equals, and they've launched their first native AI assistant for spreadsheets. But it goes back to some of the things we loosely talked about months ago, where one day, instead of you typing the formula, you're just going to be able to type, and it's going to create the formula for you. So essentially, they have a hotkey to do it. But basically, it launches their AI assistant feature to help the user write and debug SQL queries and connected databases, write fixed and explain formulas in any cell, and edit and summarize charts in the spreadsheet. So you're going to be able to, through natural language, fix a formula, create a formula, that type of thing, which we thought was the natural evolution. And I'm sure Excel is going to do this, and I'm sure Google Sheets will do this too.
Did we talk about the lawyer who used ChatGPT on the show? The lawyer who used it to submit a brief to a federal court, and it made up a bunch of crap.
I think we've had a couple of lawyers do some stuff. But
where was that? Just online on LinkedIn? We talked about it. So a New York lawyer has admitted to using an AI program to do his legal research and submitting a brief to a Manhattan federal judge that cited bogus court decisions. The lawyer, Stephen A. Schwartz of Levidow and Oberman, submitted a 10-page brief that cited more than half a dozen relevant court decisions. it just made up these court decisions. They didn't exist. And he said he learned about ChatGPT from his children, his adult children, and he didn't realize that it would make stuff up. So let's talk again about this. ChatGPT hallucinates. It makes stuff up if it doesn't know the answer. So check what it says. You cannot rely on it to be. It needs to be fact checked. Yes, fact checked.
I mean, maybe it just needs a warning. I know there's always legislation in this and all this, but it just needs a little warning that, like, hey, you should review these things before you actually use them. You know?
Well, I think it does. It even says that. It says, like, I'm an AI language model and I don't have access to all of the things. But people they don't read. They do not read.
Going back to an old prediction I made, I think I missed it by like 2 years. I said, pretty soon other companies will be in our space. And my prediction was somebody like Netflix, because Netflix built their own payroll software for movie production. And, well, it's kind of happened now. There's a company called Made4Net, and it's a warehouse management system, like an ERP level tool for like omni-channel warehouse, inventory, labor, shipping, last mile delivery, all of that. Their customers were IKEA, Valvoline, DHL, Uber, Well, IKEA just bought them. So now IKEA owns a SaaS app.
So what does it do?
It's a warehouse management system.
Mm.
And they bought it because IKEA apparently is planning on this big omni-channel expansion in the U.S., their largest expansion in 4 decades in the U.S. market. But they're still going to run the app and let their current customers use it. So they're a
software
cloud
company.
SaaS app player. IKEA is.
Amazing. Well, I saw a story in MIT Technology Review about a big development with AI and Google's DeepMind. Google's DeepMind has developed an AI system that can create its own algorithms. That's a little scary. That sounds like AI becoming, could become sentient, but not yet. What it's doing right now is using a form of machine learning called reinforcement learning to create algorithms that are more efficient than those created by humans. And they're using it to perfect and improve sorting algorithms that are at the foundation of computer programming. So, I'm not a programmer. I don't know computer science very well, but I do know that a lot of the foundation of computer science and programming is sorting numbers and comparing them to each other. Like, is this number bigger or smaller than this number? And sorting them. That's how we create code. Really, that's the foundation of code, is just comparing numbers to each other. And so, what they've done is they've used this AI to create algorithms to do sorting that we thought could not be made any more efficient. And the AI figured out how to do it more efficiently. And for instance, they can speed up sorting list items 70% faster. And what that means is that the thing that these processors are doing at the fundamental level can get 70% faster. So we can continue to improve speeds of processing without because we're approaching the limit of silicon and light, the speed of light. So if we get the algorithms more efficient, we can continue to make faster processors.
That Moore's law, where they just keeps doubling, right?
Right. This is the way that we get Moore's law to continue. And I just thought that was amazing. And these are things that we've been working on for 50 years. Like a 50-year-old record in computer science just got broken by AI. A faster way to do matrix multiplication. A core problem in computing that affects thousands of everyday computer tasks. So that's pretty cool. Any more tech news from you, Dave?
Not anything that's you have some articles, but I don't think anything.
Nothing that you're too excited about?
You know what I mean? Like, you look at it, I'm like, yeah, it's not worth opening my mouth about. So we can move on.
I got one more before we talk about PwC. Crypto scams are 5 times as costly as other cyber crimes, according to a study. So the typical internet crime costs $16,000. Your cryptocurrency-related scams, the average loss is $86,000. They did this by analyzing data from the FBI. So I think it just, why is this? Why does this happen? It's because it's so easy to do cryptocurrency scams. That's the thing, right? You can't reverse the transactions. There's no protections in place for the people who have cryptocurrency, right? When there's bank fraud, You can catch it, you can reverse it, but not with crypto. So this is a problem that crypto has to overcome. All right, let's talk about PwC. So we haven't talked about it, and it's been going on for weeks now. So I asked ChatGPT to write me a timeline of events. And I did click through on the citations, so I think it's pretty accurate. David, have you been following what's going on with PwC Australia?
I feel like there's just, for the last 4 or 5 years, there's a mess of Australia accounting things anyways. Like, their governing body has, like, they were taking the members' fund. It'd be like the president of AICPA spending the AICPA membership funds on other stuff. And when I say other stuff, like really bad stuff, like
you say they were what, improperly using funds?
Yes,
because that's not the story I saw.
This,
not
PwC
this.
Not this has nothing to do with the PwC, but I mean in general, like Australia's had some major
scandals,
and accounting-related scandals over the last 4 or 5 years. Major,
like, and not just KPMG,
like, big
KPMG
enough to get
cheating scandal.
Yeah, the cheating scandal. Like not. And when I say like major scandals, this isn't like only accounting people talk about. This is like major news stories in Australia, I guess. Some of these scandals.
So here's the summary for those who haven't been following, and this has been making nightly news, according to Heather Smith, down under. Like, can you imagine like if PwC had a scandal like this in the U.S.? I mean, I guess it would be like Enron. That's the equivalent. Last thing I can remember that made major nightly news. So earlier this year, the former head of international tax for PwC Australia, Peter John Collins, was deregistered for sharing confidential government briefings on new tax. PwC had been the federal government's consulting firm of choice. So PwC was consulting with the Australian government on how to reduce tax avoidance by multinational companies. And PwC's head of international tax was taking that information and using it to help their clients who were looking to avoid tax. Right? So big no-no.
Yeah.
Using one client's information to help another client, especially the government. So they were using this confidential government information to benefit their own bottom line, leading to a scandal. On May 18th, the Department of Finance was criticized for entering into a new contract with PwC, even as the scandal was unfolding. And on the same day, PwC's global bosses seized long-term oversight of its Australian businesses following the local team's involvement in the tax leak scandal. So global PwC took over. By the end of May, PwC Australia's CEO Tom Seymour had resigned from the firm, and 9 partners had been directed to stand down pending the outcome of an internal investigation. In response to the scandal, several entities, including Australia's largest pension fund and the Reserve Bank of Australia, have frozen future contracts with PwC. PwC Australia is now subject to multiple investigations, including a potential criminal investigation. They are in big trouble. That's what that means to me. So how does something like this happen, right? It's the definition of unethical, right? And CPAs are supposed to be like the most ethical profession. Like that is like one of our core values is ethics, right? And independence and integrity. And then you get scandals like this, which talk about an image problem. What do you think young accountants in Australia think about the accounting profession when this is on the news every day? Like, it's not a good look.
And so, this is not even the bad stories. Like I said, and maybe Heather Smith needs to give us a recap of the last 5 years summary of accounting scandals. But like the bad ones, and I'm trying to Google this because I don't want to say these things unless I know for sure or I have a little bit of Australian.
The audience is riveted.
PwC issues and
the audience is riveted
pushing down
David
the older
Googles.
Stories now, so I can't find the older stories.
Well,
CPA Australia, maybe this is the one. Yeah, so they had major 2018, 2017. CPA Australia is a national scandal.
It's been a few years of not great news coming out of Australia.
But this is what I'm saying. Like, how do you expect the ethics to occur in PwC if the actual leadership of all accountants in Australia have
It's
had questionable
completely
ethics
unethical.
problems. So
Yeah.
that's what I'm coming
It's a
from.
problem. It's a core. It's a problem all the way at the top, right? Or you could say that the rot goes all the way to the top, and you can't fix it with ethics training. It's all financial incentives. Like they stood to make a lot of money from using this information that they should have kept confidential to help their other clients, and money trumps everything in the end, right? You give people the wrong incentive, and they'll figure out a way to rationalize their behavior. I mean, that's part of the fraud triangle is rationalization, right? It's what means, motive, and rationalization. I listen to enough Oh My Fraud that I should know the answer to that. But yeah, they do it. And you try to combat it with, ethics training and tests and all that. And then they go and cheat on the tests. So, I think if we want to like resolve our image problem as an accounting profession, we got to deal with like the fundamental conflicts of interest that we've got in the profession that we've set up in the way that our firms are structured and the way that we are regulated. I talk frequently about the fundamental conflict of interest that we have in the audit and the way that auditors are compensated by their clients. And so they have a disincentive to find fraud and to find problems and to just let clients pass audits. So, I mean, we had a story recently about how partners who find internal control deficiencies are punished by their firms because it creates a problem with the client. I mean, that's what's implied. We don't know why they're punished, but why do you think, right? So, I mean, these are big issues that if you want to fix the image problem, you got to fix like what's going on underneath. And I don't think there's enough interest at the top of our profession in actually solving those core problems that we know are there, that everybody who has worked in public accounting, everybody who watches the news sees, and it's like our leadership is just ignoring it and pretending it's not there because they don't want to admit it.
Yeah, there's no sessions of like, there's no track of accounting's most uncomfortable discussions. And
yes.
you could take part on the mental health discussion, the ethics discussion, the audit conflict discussion, but none of those sessions exist.
No. I mean, like, that's the thing we need to address as a profession, like the toxic workplace problem. Like, not every firm, but a lot of firms, I would say their workplace is unhealthy. And the hours that people are asked to work is unhealthy. It's bad for you. It really is physically and mentally bad for you. And just because somebody's not working in a factory and they're working in front of a computer doesn't mean it's okay to work them more than 40 hours a week. And we have to address that as a profession, making work-life balance a thing, making like unpaid overtime, like addressing unpaid overtime as a problem in our profession should be something that's at the top of the list, because we know that is what is driving a lot of young people out of the profession. But nobody wants to talk about that. I didn't hear a word about that at Engage. And I would love to help make that discussion happen. We talk about it on the show, and we know that it resonates because our listeners say it does with them, but you don't hear it. You don't hear it at the top. Hey, we had a voicemail that I want to play before we go, David.
I just think, so you talking about this, like, this we're not hearing, right? One of the things I picked up a tone, and I feel like I've heard it in the other town halls as well, this like, to make you more competitive, right? Like, you're going to have a better firm, you'll be more competitive, you're going to charge more and do all these things. And I feel like it's being framed to be competitive against the other accounting firms. And really at the AICPA level and as an industry, it should be like accounting versus all other industries. Well, helping accountants to beat each other up doesn't make a lot of sense.
What I would love is if the AICPA advocated to overturn the exemption for staff accountants for overtime. Like, they should get paid overtime. It's crazy that interns get paid overtime, but staff accountants don't. And if staff accountants got paid overtime, then, maybe the firms would think twice about working them 60 to 70 hours a week. At least there would be a financial correlation to it. And at least they'd feel like they're getting paid for it. I mean, it's not right. We've normalized unhealthy workplaces in accounting for 100 years. And we need to undo that. We need to fix that if we want to retain young people in the profession. We need to acknowledge it's a problem. We got a voicemail a few weeks ago that I want to play because I keep forgetting to play it. And We got time, so here it goes.
Hey, David and Blake. This is Bill Holowski from Cruise Consulting. Hey, I want to let you know I've listened to just about all your podcasts, and I always highly recommend everyone on my team listen to your podcast. Love the content. Keep up the great work and the great content. Appreciate it. We'll catch you. Have a great day. Bye-bye.
Thanks so much for the kind words. We really appreciate it. If you want to leave us a voicemail, you can send that to us as a voice memo to cloudaccountingpodcast@earmarkcpe.com. That's cloudaccountingpodcast@earmarkcpe.com. And you can send us your thoughts. We will take a listen, and we might even play it on the air.
That's all the news I have.
That's a wrap.
I think this week.
Thanks, everyone who joined us live. As usual, you can follow us on YouTube. Do subscribe, and you'll get notified when we go live. You can chat with us. Let us know your thoughts. And we will see you all again next week. Bye, everybody.
Blake, I'll see you in 2 hours when we do our taxes.
I'm looking forward to it. Let's hope we can get it done.
Bye. Everyone.